In this video, I want to talk about how as a retail trader, after having traded the last 8 years, I have found a new way to look at my trading and treat my trading as a hedge fund. I'm going to explain this concept so hopefully by the end of this video, you'll be able to approach trading with a new outlook and a new perspective, which is not only going to reduce an enormous amount of emotional toll, which trading probably has on you, but at the end of the day is going to help you find more profitability and consistency in your trading. Now let's play this clip that I sent to my students the other week over inside my mentorship group. It helped them and I know this will help you. All right, I wanted to make this video and talk about some important expectations and perspectives that you guys need to understand, something you need to put into place. And this really pertains to the psychology behind trading, what is a very algorithmic and systematic way. Now, let's just set that, record straight here. The goal of anyone, right, when starting out trading is to make money. If we set benchmarks for performance, we can use the S&P 500's growth, or let's say, for example, a hedge fund. If you were to invest your capital in the S&P 500, you could expect to, in return, right, over the long run, make about 6 to 8%. And when it comes to hedge funds, the average yearly return is just over 7%. So my goal as a trader is to outperform traditional investments. That is meaning outperforming hedge funds. Now, if I was to put my money in a fund, I would expect 7%. My goal obviously is to make more than 7%. When you look at your trading performance, you can't look at it in a day-to-day or week-to-week or even month-to-month perspective. I suggest looking at it in quarters and yearly. So you would get your yearly returns and you'd get your quarterly returns. Now, the hard part is because we are actively placing these orders and seeing the outcome on a day-to-day basis, what we do is we make preconceived biases on our yearly performance. For example, if we just traded today and we took 2 losses and we're down 20% on the day, that is all we're going to be able to focus on. If your money was invested in a fund, you would have no idea what that day-to-day, week-to-week performance or month-to-month looked like. You would just receive a quarterly report. Now, the way that I go about looking at my trading when trading this very systematic way, where there is nothing essentially that I can do to change the outcome. This is going to be an outcome that we cannot control. The way we're trading, when we're placing these orders, either your stop loss or take profit is going to get hit. Now, there's little discrepancies like order fill prices, whether you go in with a market order or a limit order, and there's going to be slippage. But besides that, those are the small variables that you don't even have control over. If you look at this as, hey, our goal here is to outperform, say, the average yearly returns of a hedge fund. You were to put your money in a hedge fund, we're trying to make more than 7%. So if you're looking at a P&L, first start by only looking at your quarterly, do like a quarterly review. Look at your quarterly P&L and look at it in a percentage basis, not a dollar basis, right? That's very important. Now, it is hard because you are seeing the day-to-day outcomes. You're putting the trades on, and then at the end of the session, you're logging those trades in your journal. What might even help you further is to connect your broker automatically with your trade journal. So you don't even have to manually import these trades. They will be automatically imported for you. The least emphasis you can put on your performance on a weekly, daily, monthly basis and just look at that quarterly performance, the better. So, again, let's set the expectation that our goal here is to return more than 7% this year. Now, with that being said, right now I'm down about 1.5% on the month. That's on the month. That's not on the quarter. That's not on the year. We want to focus on really the end of the year goal and what our P&L is going to look like. So you cannot get emotional, discouraged, excited based off of the short-term performance. Pretend as if your money was in a fund that you had no control over and you were just going to get those quarterly reports. You have to put yourself in that position. The idea here is that we're trying to remove emotion from trading. We're trying to not be like every other trader. We're trying to trade this very systematic way that in theory could be traded by a robot. And we'll have bad weeks. We'll have potentially red months, but we want to focus on that larger perspective, thinking 100 trades at a time. And that's really the best thing that you can do. Hide your net P&Ls. Don't look at how much money you're making in dollars. Focus on the percentage. If you don't even have to touch that trade from after you actually place it, if you don't have to actually export it and put it in your trade journal, that's even better, right? That's one less place where you'll be interacting with your performance, where you'll be one less place where you'll actually be seeing how much you made or lost. And then you can do a monthly performance review. That's fine. Make sure everything's good. But at the end of the day, we really want to just have that goal in mind to outperform traditional investments. If we can do that, that means our money is in a better place. Now, hopefully we can do exponentially better than that. But I think, like I said, the biggest thing for you all is going to be to not focus on these shorter term perspectives and to just put yourself in a mindset of look at that bigger picture. If your money was elsewhere being managed by someone else, that's how you should treat it. So far, we are down this month, but that shouldn't matter. You shouldn't actually even know that, right? If you weren't actually actively placing these trades yourself, you would have no idea. If your money was in a fund, you'd have no idea if you were up or down right now. You would have no idea if that fund made or lost money on your account today. You gotta treat it the same way as if your money was invested elsewhere. Now, if you're interested in taking trading seriously, if you either want to become a full-time trader or simply build another stream of income, like I said, I've been trading for the past 8 years and I've developed tools and resources to help me beat the market each year. Now, if you wanna learn more, click the link in the description below. And if you found any value in this video, make sure to subscribe for more content. With that said, I will see you all in the next one. Later.